everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot. But before we go into any details, I want to let you know that anything you hear in this video is for information and educational purposes only. Nothing in this video should be taken as personalized investment advice. Investing comes with a lot of risk. To read more about it, please see the description below. And if you want to read more about what John writes on a regular basis, you could head directly to incomeinvestors.com. While you're there, you could also sign up for some free special reports that we offer to our readers, and they get delivered to your inbox. Some specialty real estate investment trusts, or REITs for short, operate in interesting industries. There's REIT that own movie theaters, farmland, amusement parks, prisons, cell towers, and casinos. One specialty REIT with high dividend yield that's firing on all cylinders that doesn't get attention it deserves, even though it is trading at record level, is Iron Mountain Inc., traded on New York Stock Exchange under symbol IRM. And maybe it has to do with the fact that people think of paper shredding when they hear the name Iron Mountain. Sure, that makes up only a portion of its operation, but it still pales in comparison to the fun, flashy lights of casino REITs. John?
Thanks, Mo. Yeah, fortunately, there's more Iron Mountain than paper shredding. And frankly, even if there wasn't, if it's churning out the financial results it currently is, no one should really care. Now, Iron Mountain is a global leader of storage, asset lifestyle management, and information management services. The company is trusted by more than 225,000 customers worldwide to store and protect billions of valued assets, including critical business information, highly sensitive data, and cultural and historical artifacts. The company's global presence includes 95% of Fortune 1000 companies as customers, and with a retention rate of 98%, customers certainly like what Iron Mountain does. According to the most recent investor presentation, Iron Mountain's real estate network includes 1,380 facilities in 63 countries across 95 million square feet. To put that in context, that's the equivalent of 2,180 acres or 1,650 NFL football fields.
And just looking at their financial results, Iron Mountain reported record third quarter revenue and adjusted EBITDA. If you could elaborate a little bit on that.
Yeah, absolutely. For the third quarter ended September 30th, Iron Mountain reported total revenue of $1.38 billion. And that was up 8% over the $1.28 billion recorded in the same period last year. Now, the company's net income dropped 53% to $91 million or 45 per share. That compares to $193 million or 48 per share in the same period last year. Its adjusted EBITDA, meanwhile, climbed 7%, as you were saying, to a record $500 million. Iron Mountain Inc.'s funds from operations came in at 76 cents per share, and that's equal to the same quarter last year. Adjusted funds from operation inched up 1% to $290 million or 99 cents per share.
And Iron Mountain recently announced a strategic acquisition. If you can explain a little bit what's happening there as well.
Yeah, on the same day it announced its third quarter results, it also announced a new acquisition. The same day it reported record financial results, Iron Mountain also announced it was acquiring Regency Technologies, which is a leading provider of IT asset disposition services in the U.S. for, I think it was $200 million. The company reported trailing fourth quarter revenue in excess of $100 million in the IT asset lifecycle management, or ALM, space alone. The acquisition adds operational scale and deepens Iron Mountain's capabilities in the ALM space, incorporating 8 new locations in the U.S. It also extends Iron Mountain's IT asset remarketing and recycling capabilities. Now, why is it interested in Regency? Well, in 2019, 53.6 million metric tons of e-waste was generated. Of that, only 17% was recycled. With the volume of e-waste continuing to rise, the demand for IT asset disposition is going to increase significantly, increasing the demand for the type of things that Regency Technology does.
I also see that Iron Mountain recently hiked its dividend for the first time since 2020.
Yeah. Before the 2020 health crisis, Iron Mountain actually had a history of raising its annual dividend, but it held it steady at 0.618 per share between 2020 and the first half of 2023. And then in early August, it resumed its dividend hikes, increasing its third quarter dividend, I think it was 5%, to 65 cents per share, or $2.60 on an annual basis. That works out to a current yield of 4.2%. And the dividend is safe. If anything, there's more than enough room for Iron Mountain to resume increasing its annual distribution. In fact, its distribution payout ratio has been falling over the last few years from 81% in 2019 to just 66% in 2022.
Even though the IRM stock is up 25% in 2023, it still has additional double-digit upside potential?
Yeah, over the last number of years, pretty much since bottoming in March 2020, Iron Mountain stock has been marching higher since the start of 2020. IRM stock has more than doubled, advancing 136%. This year alone, Iron Mountain stock is up, as you said, 25% year to date, and a little more than 27% over the last 12 months, which is seriously outpacing the S&P 500 and slightly just a hair behind the red-hot NASDAQ. Now, one thing Iron Mountain has over the S&P 500 and the NASDAQ is its frothy dividend. The average dividend yield of the S&P 500 is like a paltry 1.6%, while the average yield of technology stocks is even like slightly worse at 1.5%. Since going public in February 1996, with dividends reinvested, IRM stock has posted total returns of a pretty massive 4,728%. Over the same time frame, the S&P 500 has posted total profits of a respectable 586%. Now, the highly touted growth stocks on the NASDAQ have posted total returns of 1,175%. Both are impressive, but nothing compared to what's going on in Iron Mountain.
John, thank you so much for your insight. Iron Mountain continues to be an excellent REIT for both income and growth investors. It has strong balance sheet, just reported another quarter of record revenue and adjusted EBITDA. It signed an agreement to acquire Regency Technology to expand its ALM business. Management expects the growth trajectory to continue, with 2023 total revenue to climb about 9%, adjusted EBITDA to advance about 7%, and AFFO per share to grow about 4%. This is good news for Iron Mountain stock and its reliable ultra-high yield dividend. That's it for today. We'll be back with another video soon. And make sure to go to incomeinvestors.com to get our free special report on our 3 income stocks to own today. One of those stocks currently is yielding about 12.7%. And you can find the link to the website in the description below. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.